So there have been a lot of changes in the financial sector, especially to the leadership. And we spoke to one just now, Johan Heaven, who's now taking over leadership at Proven. But there are several other changes as well. So what is going on? What is this, I guess, power shift happening within the financial sector? And how should we as investors feel about all these changes at once?
So, the most recent, within the last week, in terms of announcements, would have come from CIBC Caribbean, formerly First Caribbean International Bank. So they've announced now the retirement of four leaders across four territories to take effect this year. So Nigel Holness and Mark McIntyre. Well, Nigel Holness is the managing director of CIBC Jamaica. Mark McIntyre is the managing director of CIBC Cayman. They're to retire by May 1. Then Dr. Jacqueline Ben, who is the managing director for the Bahamas business, is going to retire on August 1. And Anthony Siraj to retire on October 31, which is the end of the financial year. Now, the retirements of leaders is an expected process, but to see the retirement of so many executive or so many senior leaders, all at once, signals a new heralded direction. And Mark Centillo, the current CEO of CIBC Caribbean, he said, that they're looking towards more country-led approach of the operations. And, they are appointing someone like Anik Dawkins here in Jamaica to lead CIBC Jamaica, which, is one of the fastest growing banks in terms of net loan disbursements during 2024. So on a year-over-year basis up to September/October, they were disbursed over $19 billion in new net loans on a year-over-year basis. And that was just behind Scotia, which is around $40 billion. And just for context, for today commercial banks, CIBC Caribbean in Jamaica is basically number 6 out of 8. So for them to have the second highest year-over-year increase in new loans does tell you that they are taking a very strong direction. And this shift to these new leaders, it tells me two things in a sense that, one, they are looking to institute a new policy or focus at these particular levels across these particular jurisdictions, which are crucial. But it also tells me that, CIBC Caribbean is making this heralded change pretty quickly, because Monique French, who is currently the Chief Credit Officer at CIBC Caribbean, she's going to become the Chief Risk Officer in May. She's actually a Jamaican as well. The other person who is currently in the role is going to retire later this year as well. So a lot of retirement is taking place, and so are put in place as well. So it's a good thing, because they're trying to aggressively grow in the Caribbean, and Jamaica is their mainstay hub. And then prior to that, January 27, you would have all heard about Perry and Gill's, move from the Bank of Nova Scotia Jamaica to NCB Jamaica.
Mm-hmm.
That is quite, the move, because Perry would have gotten a promotion, back in November to have a bigger portfolio overseeing the, I would say the Central American and Caribbean markets, and to see him, go to NCB, it tells me that they are not joking, because we've seen what has happened with NCB Jamaica and
The money run, David.
Well, I don't think it's just money in a Kalila.
Made him an offer he couldn't refuse.
Well, think about this way, Kalila. Audrey Towerhen, who is the current CEO of VNS Jamaica, she was at NCBJ for about 8 years, and then she went back to Scotia, and she became the CEO. And the portfolio she was managing was the retail portfolio, basically. And it's the portfolio that Perrin Gale was overseeing for the last 4 years after Audrey's promotion. So his movement towards NCBJ in the same position definitely tells you that he's, in my opinion, being poised for a higher role at the bank, because Bruce Bowen, who's a former CEO of BNS Jamaica, he's turning 64 this year. So with another year at best, he's 65, which, is the normal retirement age for most entities. So my bet is that Perrin is actually going to become the CEO of NCBJ within the next year or two, or even higher for the
Mm,
financial group. It's
interesting.
no, think about Kalila. You're
Makes
talking about
sense.
Scotia. You're talking about Scotia, Kalila. The reach and depth that Scotia offers, not just in Jamaica, but across the region and across the Western Hemisphere, is pretty hard to beat compared to NCB Financial Group, which is mainly towards the Caribbean in particular. So that's just how I see it. And they would have brought on Saravanan Tangavelu from Hinduja to lead the IT division. And Sherry Martin got moved to becoming the chief operating officer. So all leadership changes, it definitely tells you that the heralded shift of new leaders is taking place, but you also can interpret it as another way of seeing that growth has to actually come from the younger generation. So we would have seen, Tanya Waldron going to take over from Taylor Lynn. We would have seen, Shirley Bridgman taking over at Caribbean Assurance Brokers. I'm trying to think of other companies. So Ian Kelly become the CEO of Derriman Trading Company. But in particular, in terms of the financial sector, these changes just tell me that things are going to be fixed up and they're going to change and definitely improve. Because NCB Jamaica, had a pretty tough year, all being equal. So while the nominal numbers are up year over year on profitability, don't forget that last year there are a lot of one-off expenses related to the departures of the former senior leaders. So when you look at that and you look at operational losses, look at the loans that were written off during the year, it was a pretty tough year for NCBJ, and they only wrote about $8.9 billion worth of new loans year over year net. So to see them
And,
repairing over another Scotia banker tells me that they are definitely playing with NCB
and that's
and they
what
understand.
that's what I was just thinking to David, because for the most part, apart from Perrin, we're seeing the promotions coming internally. So the changes coming from people being promoted internally. But NCB recruiting Perrin from Scotia, which did those numbers in 2024, 2023, 24, that is significant, isn't it?
Definitely, you're talking about someone who would have overseen the growth of their mortgage book and a strong retail portfolio. Because for BNSJ, they have about $80 billion worth of mortgages. For the overall Scotia group, they have about almost $100 billion worth of mortgages right now. They're more than a one fifth of the apologies. They're about one fifth and above of the overall mortgage market in Jamaica. And back in 2020, they didn't have such a large presence and position in the residential mortgage market. And when you do check out Scotia's numbers and look at the non-performing loans and other figures, it's very good. Like it's a very strong and quality book. And NCB would have brought on Dr. Carrie Hepburn Malcolm, who was in Trinidad before, but she was also a former Scotia banker as well. So
And I say all of this, especially in the context that NCB shareholders have still been concerned about the share price. That's the strong link making a comment here. NCB's share price stuck at 50 plus, way below its highs of over $200. A return of dividends not yet impacting, worrying.
but think about it, Kalila. Let's be very practical in this whole sense. You're talking about would have gone through COVID, gone through inflation, having high interest rates, and apart from Guardian Holding being a bigger business as time progresses, the Jamaican business for NCB has been under pressure. We would have also seen the Cayman still not go through. You know, they would have just had the leadership changes, and they'd had the APO recently, which would have been trying to shore up liquidity, but they're just been a lot of different factors in that have not been positive towards the price. And even if you're talking about bringing back dividends go to all shareholders, but dividends are also a bigger windfall for the largest shareholder. So bringing dividends back, might not seem like much to some people, some person's pensions, but At the same time, I don't think that's going to be the only catalyst to bring NCBJ, or NCB Financial Group stock price back up to astronomical levels, honesty, because NCBJ trading below book, cheap PE, all these other things. But when you compare it to a normalized year, let us say probably 2022, which was the last normalized year for NCBFG, the numbers are not as positive as they should be. And the reality is they're in a tough space. Cap markets, which is their main growth engine, would have been under pressure from higher rates and reduced investment gains and so on. So it's pretty tough.
Yeah, so a lot has been going on in the market, and I think the trust factor as well, David. It's taking a lot for people to trust NCB again.
To be honest, it's a lot of things going on because some persons conflate NCBFG and NCBG as the same entity when they're not. But there are just a lot of factors, some I have not mentioned, so far in this discussion, but there are just a lot of factors that are on persons' minds, and we also shouldn't forget that persons are looking to get liquidity for other purposes. You know, whereas for some people are going to be like, why am I going to stay in this position when I can redirect capital towards something else? And the Uber saga, I've not had any updates on that whole development, but it's been a pretty tough time for them. But Kyrgyz mentioned that they're trying to steer the ship a little bit better. We've seen stronger governance through the appointment of several new independent directors. You know, they mentioned that they've been focusing on automation heavily. You know, at the JC conference they launched, I believe it was a chatbot, for NCB capital markets. So they're trying to do different things, but it's a tough scene.
Yeah. However, I still see optimism in the comments. I see Cool Cat saying, I think NCB is a good buy. I'm buying more NCB. Jason says NCB is a good buy, and now that it's cheaper, I'm just buying and waiting. Lanesra says, I will start trusting NCB at $48.
To me, Kalila, opportunity cost is a hell of a thing. If persons are confident, go ahead, but just don't forget that there's opportunity cost of choosing one investment over the other. I'm not saying, not to buy or not to sell NCB. I'm just saying assess everything in context, because truth of the matter is last year person started saying NCB cheap at 70, NCB cheap at 50. If it's at 45 tomorrow, it's going to be cheap same way. So the opportunity cost for me, has to really be assessed, because even with the current dividend payments at 50 cents, which comes out to around 4%, dividend yield, there are other alternatives on the market giving similar or higher yields in this relatively high interest rate environment, which is still taking time to, come back down.
Yeah. Well, thank you so much for your
Only,
perspectives this evening, David.
only one last thing to add, Kalila.
One more thing, go ahead.
The Agostine is, well, the Caribbean Distribution Partners acquisition of Massey Distribution Jamaica. That's quite a deal, Kalila. Why? Caribbean Distribution Partners Limited is a joint venture between Agostines Limited, Trinidad Company, and Goddard Enterprises Limited, Barbadian Company. For context, Health Brands Limited is a company bought in 2023 August as Agostines, and that was their first entry into Jamaica. And now to their joint venture, they're getting more Jamaican exposure. Goddard, they are the ones that own Fidelity Motors, which distributes Nissan vehicles in Jamaica. They also have, several other Jamaican businesses as well. But the fact that, we're seeing Agostine in particular increasing Jamaican exposure, it tells that, we might see a couple more acquisitions in the coming months. I'm looking forward to see what Massey is going to be doing in terms of its growing its Jamaican presence. There are more nuanced perspective, because they mentioned that, one of the countries that they faced in terms of, making a decision was that the distribution portfolio is harder to scale out manufacturing or retail. Did you know that, the Hilo brand is actually a massive business, Kalila?
I thought Hilo was Grace Kennedy.
Grace Kennedy bought it from Massey in 1984. So the
So
Hilo
it
brand has to do under
started as a
Massey.
massive business. It started as a massive business.
Correct. And when Massey rebranded in 2014, they rebranded their high-low stores to Massy stores. So
Mm.
I just came at this story to kind of show you that if Massy didn't have to go through the tough period it went through in the 1980s, you probably still had high-low. You probably would still be seeing, Massy distribution in Jamaica under the Massy portfolio in a sense. But I'm just putting this out that I'm putting this discussion out because we would have seen in a prior period, which was December 2022, Augustines would have acquired Collins Limited in Barbados, which also owns Carla Laboratories Limited. Carla Laboratories manufactures Histotussin, Dica, Histol, all these famous drug used pharmaceutical. They're manufactured here in the Caribbean, and Augustines owns the manufacturer, and then they own the distributor in Jamaica. And now they're going to own a business in fast-moving consumer goods. So I'm just showing this whole mix that it's quite, a set of developments by Agostini's because the portfolio for Calais Labs used to be issued by Massey up to January 1, 2024, when they moved it over to Health Brands. So I'm just showing you that Agostini's is just collecting Massey's business piece by piece. Whereas it took to Carlisle Labs, and then they're taking the distribution business now in Jamaica. So
Interesting stuff. Thanks for the insights, David. We'll keep our
you're
eyes on
welcome.
those.